Hello, and welcome to FHWA's Innovative Finance video series. I'm Jared Vigilkowski, and I'm pleased to introduce Pete Mankowskis, the Innovative Finance Program Manager at FHWA's Center for Innovative Finance Support.
Hello, folks.
Introduction. In this video, we will discuss state infrastructure banks, what they are, how they work, and how state and local transportation agencies can use them to diversify project funding and advance project delivery.
State infrastructure banks, or SIBs, are usually established and administered by a state Department of Transportation and are typically funded using federal aid and/or additional state funds. SIBs are revolving loan funds to support highway, transit, and rail projects. Much like private banks, SIBs can offer a range of loans and credit assistance products to public and private sponsors of eligible transportation projects. Specifically, SIBs offer investment-grade financial lending, including below-market rate subordinate loans, interest rate buy-downs on third-party loans, and guarantees and credit enhancements. Designed to complement traditional transportation funding programs, SIBs increase flexibility in project selection and financial management.
So when did SIBs start? The National Highway System Designation Act of 1995 authorized the first SIB pilot program in response to the need for additional and diverse methods of transportation project funding at the state and local levels. This first pilot program authorized 10 states to establish SIBs. Due to the interest in the program and its benefits, the 1997 U.S. DOT Appropriations Act expanded the pilot to include 38 states and Puerto Rico and provided $150 million in federal general revenue funds for SIB capitalization. In 1998, Congress authorized a second pilot program through T21, which provided new funding for 5 states. In 2005, SAFETY-LU gave authority to all states and territories and the District of Columbia to establish SIBs. In 2015, the FAST Act allowed states to use fiscal year 2016 through 2020 federal aid apportionments to capitalize SIBs, and enabled states to enhance their SIB programs by leveraging TIFIA loan proceeds, which can be used to capitalize the SIB's Rural Projects Fund.
The SIB program has become a valuable complement to existing federal surface transportation funding programs. Since its inception, SIBs have executed over 1,200 loans with a value of over $3.1 billion.
$3.1 billion sounds like a lot of money, because it is. But SIBs don't just create money out of nothing. How exactly do SIBs stretch those dollars?
Let's say a state DOT wants to finance a portion of the cost of a bridge replacement on a state highway. The state already has some capital funds for the project, but wants to finance the remainder of the project costs to conserve resources for other projects. They decide to augment capital funds with a SIB loan. The state DOT can capitalize its SIB with eligible federal funds and a required state match, and lend those monies to fund all or part of the project costs. Combining existing funds and a below-market rate loan allows the state DOT to continue project development and construction without financial interruption, helping the project to remain on time and on budget. As the SIB loan is repaid, the SIB's capital is replenished and can be used to support new projects.
Benefits. So what are some of the benefits of SIBs?
Accelerated project delivery. When government agencies and authorities have to wait to amass enough money to fund transportation projects, the project can be delayed, resulting in congestion, infrastructure degradation, and additional costs. SIBs can enable projects to start sooner by using diverse sources of funds to acquire necessary capital. When infrastructure projects are delivered sooner, the public gets access to safer and more efficient transportation, while communities may see increased commercial benefits as well.
Stretching the dollar. SIBs can supplement a state's grant program. The SIB can stimulate new revenue sources, such as local option taxes and fees that borrowers can use to repay loans and other credit assistance. In addition, SIB credit assistance can replace grant funds to finance selected projects. SIBs and other types of credit assistance align the costs of project construction to the life cycle of the asset using the new revenue sources previously mentioned. This gives agencies new tools and budget aids when developing short and long-range transportation plans.
Recycling transportation funding. Repaid SIB loans can be recycled as a source of financing for future transportation projects. SIBs can offer credit assistance to one set of projects and, as the borrower repays the loan, the funds are replenished, enabling assistance to other projects.
Increased local investment. Many communities do not have well-established credit ratings or lack experience in capital financing for transportation projects. SIBs can help these communities by providing both financial and technical assistance. Through SIBs, local governments can access capital markets at lower interest rates. The SIB serves as the intermediary, borrowing money through the issuance of bonds and then lending the proceeds to local governments. This pooling of borrowers for a SIB-issued bond achieves economies of scale and lowers the cost of capital.
Enhanced private investment. SIB credit assistance may attract private resources to supplement public investment in projects. Also, private entities can borrow directly from a SIB for eligible projects, taking advantage of favorable interest rates and lower risk. Or a SIB can help finance a P3 project, helping attract private developers wishing to take an equity interest in projects. Federal and state funds committed to projects help assure private investors of the likely success of projects. In turn, private investment can help close the funding gap and promote economic development.
Key elements and provisions. Let's get into the details of SIB credit assistance.
Loans are the most popular form of SIB credit assistance. SIB loans can finance all or part of a project's cost. They offer flexible repayment terms and a deferred payment schedule, and they can be subordinated to other debt. A SIB loan may be provided for any phase of an eligible project.
SIBs can be unleveraged or leveraged. An unleveraged SIB lends available funds directly to projects from its own existing capital, while a leveraged SIB borrows additional capital by issuing bonds or other debt to increase its lending ability. Leveraged SIBs can be more advantageous because more funds can be made available earlier. Leveraging provides funds now that could take years to obtain through the simple revolving of loaned funds.
All projects receiving federal SIB credit assistance must comply with the federal requirements that apply to projects under Title 23 or Title 49 of the U.S. Code. Each SIB administrator is required to establish fiscal controls and procedures that can ensure proper accounting for the payments received and disbursements made through the SIB.
SIBs lend funds to eligible borrowers, including public entities such as state DOTs, regional planning commissions, transit agencies, economic development corporations, and others. Private companies and nonprofit organizations that are developing publicly owned facilities are also eligible for SIB credit assistance. Eligibility requirements vary by state, so potential borrowers should verify eligibility with their state SIB.
SIBs can finance pre-construction activities, highway construction, and transit capital acquisition.
Process. Now, let's walk through the steps of setting up a SIB and providing SIB credit assistance. Most states need specific state legislation to authorize the implementation of a SIB program pursuant to the federal statutes. Before a SIB program can be implemented, decisions regarding its structure and administration should be addressed. States have significant flexibility in how to administer and manage the SIB and its accounts. Options for administration include a state DOT, the most common approach, an independent state financing authority, another state agency, such as an economic development agency, a new nonprofit corporation, or a new joint structure among two or more state agencies with shared responsibilities.
Once the state authority is in place, the state executes a cooperative agreement between FHWA and the responsible state official. This agreement establishes the SIB program and specifies the requirements for program and fund management. The agreement requires the establishment of separate SIB accounts when funds are provided from different Title 23 and Title 49 programs. In addition, if the state uses a Rural Projects Initiative TIFIA loan to capitalize the SIB, a separate fund must be established as well.
How will the SIB be capitalized? The FAST Act allows states to obligate up to 10% of the apportioned funds under the National Highway Performance Program, the Surface Transportation Block Grant Program, and the National Highway Freight Program to capitalize the SIB. However, states can't only capitalize their SIBs with federal funds because of the required non-federal match. For every federal dollar used to capitalize a SIB, the state must add an additional 25% of non-federal funding to equal the 20% match.
Also, under the FAST Act, a SIB may capitalize a rural projects fund with the proceeds of a TIFIA loan to finance rural projects located outside of an urban area that has a population of greater than 150,000. The maximum principal amount of a TIFIA direct loan to a SIB is $100 million, and the minimum principal amount is $10 million. For more information on the TIFIA loan program, check out the TIFIA video in this series.
Now, the SIB is established and capitalized. To use SIB funds, typically a state will implement an application process for project sponsors interested in SIB credit assistance. Once SIB credit assistance is approved, the project sponsor will enter into a written agreement with the SIB covering the financing conditions and requirements.
It is important to note that a SIB loan may be repaid using the Garvey program, effectively using federal funds as a repayment source. For more information on Garveys, check out the Garvey video in this series.
Project examples. Now, let's walk through a few examples of SIBs in action.
The Pennsylvania Infrastructure Bank, or PIB, was established with the first SIB pilot program in 1997. Since its creation, the PIB has funded over 400 projects totaling $743 million. An example of a PIB loan recipient is the Loganville Bypass Project in Springfield Township in rural York County. This project leveraged both private developer and local government funds to replace and relocate a narrow and winding section of Pennsylvania Route 214 and improve access to Springfield Township from I-83. Springfield Township and Loganville Borough funded preliminary engineering, right-of-way acquisition, and utility relocation at a cost of $1.6 million. State and federal transportation funds, including the $1.1 million PIB loan, funded construction.
An example is from the Florida SIB, which was also established with the first SIB pilot program in 1997. As of the end of fiscal year 2018, the Florida SIB has funded over 100 loans totaling over $1.8 billion through a federally funded account and a state-funded account. One example is the $22.8 million loan for the widening and extension of SR 56 in Pasco County, which financed one-third of the project's cost. This project also included a public-private partnership with FDOT, Pasco County, the City of Zephyr Hills, and 4 private developers. In addition to the SIB loan to Pasco County, the project included funding contributions from the county, the City of Zephyr Hills, and the 4 private sector partners who also donated right-of-way. This partnership, together with the SIB loan, accelerated the delivery of the project, and by building sooner, generated cost savings. Summary.
SIBs are an innovative tool to meet project financing demands, stretching both federal and state dollars. SIBs can complement other funding and financing tools to enhance project delivery, save time and money, and help bridge transportation funding gaps.
For more information, visit the FHWA website or talk to your local FHWA division office or state DOT to find out more about establishing or utilizing a SIB. Please note that except for the statutes and regulations mentioned, the contents of this video do not have the force and effect of law and are not meant to bind the public in any way. This video is intended only to provide information and clarity to the public regarding existing requirements under the law or agency policies.
Thank you for watching this video. Please check out the other videos in this series for more information about innovative finance for transportation projects.